Hello everyone, my name is Matthew Frailey with BreakpointTrades.com. We've been bringing you advanced technical analysis, market commentary, trade ideas, and mechanical trading algorithms like you see here since 2003 for individual traders and professional institutions, some of which I consult with on a weekly basis. Okay, lots going on in the market, so let's get started here. This is a technical review of the markets for Wednesday, March 6th, 2022. As you know, we had the Fed day, and it's quite a wild action. The S&P had well over a 100-point reversal. Volatility has been par for the course for this market. So I want to update you guys on what we're seeing since my last video. And so let's get started here. As you can see on the table of contents, this newsletter will be divided into 6 major sections. I didn't add a bunch of text here for you to read. Just listen to my audio, watch the video. Great week on Zim. This was the dividend play that I listed last Friday. They have a one-time dividend of $17. Ex-dividend date is March 22nd, and it has been powering higher, so congrats if you bought that. I'll go over other trade ideas, but let's go ahead and get started and look at today's action. So item number 2 below shows the index sector table, what transpired today and this week. You can see solid gain for the markets today. NASDAQ area up about 3.7%. Russell up 3.2%. S&P up 1.25%. Solid gains for the week here with the indexes up anywhere from 3.5% to almost 5% for the NASDAQ 100. Major market sectors, all of them were up except for the utilities and the energy. Okay, energy down pretty big for the week. Oil services down almost 10.5%. XLE energy down about 6.7%. As you know, we've had pretty nice correction pullback in the commodities and the crude oil area. It was way overdue. We knew it was going to happen. And, you know, this is the kind of effect you get. Now, long term, I believe these areas are in bull markets, but they were very overdone. They had parabolic blow-off type moves. And so now they're getting a correction that is much needed. But big move in the other index, the other sectors here. Currency-wise, U.S. dollar down 0.7% today, almost 0.9% for the week. Cryptocurrencies all up nicely. They tend to be leading with the market, and that's positive, up pretty big for the week here. Overall, though, Bitcoin and Ethereum are still in these coil-type patterns. They have yet to break out, so they could still have much larger moves. Commodities, all mostly to the downside. Big down week on almost all the commodities here. Look at these moves. Crude oil down over 13% for the week. General commodity index down 6%. This is the daily moves. Natural gas was the one exception here, up about 4%. Natural gas, by the way, is coiling, so you want to keep an eye on that. Precious metals were up today. Gold and silver, and GDX up slightly, but they're all down for the week. As far as the bonds and interest rates, high yield corporate up today, TLT up, long-term rates are up. And again, as you know, well, I'll get to that in a minute, so let's move on. Item number 3 shows the economic news calendar for this week. Again, as you know, we had the FOMC today. Wild action there. Market was down initially at like 100 points, came back in a strong way. Chairman Powell, they raised rates by 1/4 point. We all knew that was happening. They have at least 6 more cycles. There was a couple dissenters who wanted to raise 50 basis points. Not going to go into all what they say. You could read that yourself. But, what matters short term is the market reaction. Longer term, we believe the market's in a bear market. It's what we think now is likely that we do have some sort of trade low in the market, and maybe we advance higher over the next 6 weeks. And again, I'll show you that in some of my charts below. So let's go ahead and move on and move to the charts. So the first chart below here, item number 4, is a daily chart of the Dow. Usually don't show the Dow, but you can see finally closed well above that 20-day moving average. This is your resistance area up in here. 50-day, 200-day moving averages in the downtrend channel. Again, Dow's only 30 stocks, so we don't really show it that often. Our proxy is, of course, the S&P 500, so let's go and move on to that. Chart number 5, here's the daily S&P 500 chart that we've been showing. with our, most of our charts, in case you're new to these guys, we use RSI, we use the moving average ribbon. Moving average ribbon is a great indicator for just seeing the trend. When it gets too wide, expanded, those are when you had your lows. When it's pinched, those are nice trade opportunities. But anyway, we've been showing this falling wedge leading diagonal type pattern, and we were looking early on and on the weekend for a possible one more move down here. But it became fairly obvious yesterday that we weren't really going to get that. The VIX was not responding. Put call was not responding. And from what I read, there's a ton of quarterly put options that are expiring this week. This is options expiration week, remember. And that would help to put a floor on the market, at least for the short term. And so this, we still count this as a leading diagonal. We would have preferred a move down, but it doesn't have to. It could be a truncated fifth wave, if you know your Elliott wave. Today we took out the downtrend line and the 20-day moving average. So here added a possible symmetry target over time up to the 50, 200-day moving average. Now, our belief is that if we have a decent low here in the short term, that if we're in a bear market, we may chop higher over, 4 to 6 weeks. It's not going to be a super quick, but again, anything can happen. And this is obviously a big resistance area. Short term, if you're long, you want to have some sort of stop in place. I would not want to see price go back and fall back below this trend line. Okay, so let's move on. Chart number 6, here's another daily chart. Steve posted this on our trading community earlier. So it shows you the same wedge, and it shows you one of the projections where we could rally up, even get up into these areas. Now, one thing I should have added here was some Fibonacci lines. So I'll do that next time, but, not saying we get up to this area, but who knows? But if we got up into this area, you could see maybe into May timeframe. I think that would get everyone super bullish, get the bus loaded back on the long side, and everyone be convinced we're going to go to new highs, and it would be a possibly pretty good short opportunity. But again, who knows? We'll just have to see how this unfolds. Either way, we still think we're in a bear market and we'll form a lower high overall. Just how long is it going to take? And I think it's going to be one of these ABC zigzags. It's not just going to be a straight up move and done. It's going to be emotional and something like this. The indicator up here, the RSI, notice you could draw a nice clean trend line here that it was broken today. That's a good confirmation. Again, what I would watch for in the short term now is a pullback. If we back test this trend line, that I think would be a good buying opportunity. Next. Chart number 7, this shows you our cycle indicators and our moving average ribbons. So a couple things we've been pointing out. The market has lately been bottoming on these 9s. This is the DeMark 9. Again, if you know your DeMark, if you don't, you can look it up. But the 9 sequence and the 13 are what's important. That formed these last two bottoms. On the daily, we're still below the ATR. That would be, I think, at minimum work up to this area. On the half day, we bounced off this cycle support. We held that. ATR is just up here. On the faster time frames, the 2 hour, we pointed out the bullish cycle support, which we bounced off a couple days ago. Notice we had a DeMark 9 on the 60s. We do have one here, but we're trying to, there's a cycle resistance right in here. If we can take this out, that would be bullish. That would be starting a stronger move. Next. Chart number 8. Here's the 2 hour time frame that we've been showing, this wedge pattern that I showed you on the daily. So again, we essentially had a little double bottom with respect to this area. We didn't get that last move down to here. And today we rallied. We took out this downtrend line. And what I would be watching for, if we get a quick pullback on, say, Thursday, Friday, I'd want to hold this trend line. That would possibly be a buying opportunity. If it does this, I will look for this area to look to buy. You can see your moving average ribbon, how it's a good guide. Every time they got too wide here, it tended to be trade lows here. So it's now pinching here. It's now at a point where it could go positive. Okay, it hasn't been that way for a while. Next, chart number 9. Here's the 60-minute chart we were shown with this trend line from the highs. And yes, I know it goes through a couple of these areas, but it was being respected. This was an area we wanted to see broken. We broke that today. We pulled back right up to the Fed. Look at this move. You can see this candle all the way down to here. So from around 43.50, pulled back all the way to 42.50, 100 points. Then we came roaring back. You see the line here? That's a little higher low. If I'm long, I don't need to give it any more room than this. Okay, so I think if you're long the S&P, this could be a higher low stop instead of giving it way down here at this point. This would be a potential wave count here, 1, 2, 3. Again, I'm not going to get too much into that tonight. Next. Chart number 10, here's another 60-minute chart, just having the trend line here from the February highs. You can see we cleanly took that out today. You can see your moving average ribbon. It's a good guide. We rallied up, pulled back 100 points after the FOMC, formed that little spike, higher low there at 42, say 52, 42.50, and then rallied back. So to me, this is where the good stop would be. I don't really want to even see it come close to this. So if we do pull back, we get near this trend line, I think that would be a potential buying opportunity. Next. Chart number 11, here's the 15-minute chart. So the other day on Monday, we had that pullback to this double bottom area. We also had a perfect symmetry. So the measurement from here and take that same measurement to here. And then you essentially had a little inverse head and shoulder pattern. Big move up today, pulled back. We didn't overlap this. So you get that higher low and then a nice move up. Next. Chart number 12, here's a 5-minute view of the S&P. Again, in this volatility, you can make quite a bit of money just trading these smaller time frames like this with ETFs. So the 5-minute, we had that flag yesterday. That would give you a nice long opportunity. Today we gapped up after the FOMC, had the huge pullback. The dotted lines here represent symmetry. So we had a little symmetry break here. That was bullish. I pointed that out. So, you know, I was out and I went back long quickly on symmetry. When I have a bullish symmetry break intraday, I'll just buy instead of waiting for a higher low. And you can see that nice push. We had some divergence there at the lows on the RSI indicator. Next. Chart number 13, here's a 3-minute chart. Just gives you a little more cleaner view here. You can see the symmetry. You had a bearish break in symmetry. Afternoon, that you could have shorted this. And then what you do is you measure the bounce attempts. And then you had a bullish symmetry break here and then that power move. This is another nice indicator, this NYUD with the 15 EMA. You can see when it's above the move EMA or when it comes back above it. It's a pretty good guide. Next. Chart number 14, triple Qs. Now the triple Qs, unlike the S&P, did make a new low. So they made, you know, that fifth wave not a truncated. All right. And so they completed their pattern. And nice move up here, closing right in this downtrend line, a little over the 50-day moving average. Here I added this previous rally attempt, added a symmetry, which would measure up to around the 50-day moving average or so. Again, I don't think we're going straight there. Want to see what happens tomorrow. You can see we have a nice divergence here on the indicators. Next. Chart number 15, here's the various cycles. So again, look at on the daily here, triple Qs. All these bottoms have been on DeMark 9. We had a DeMark 9 the other day. Half day, we had the cycle support. We're right up against the ATR. 2-hour view, we had an end of bull cycle. Perfect rally from that. We're above the ATR in these lower time frames. And we had a 13 DeMark on the 60. Next. Image number 16, here's a 2-hour view of the triple Qs. Again, you can see we had an essential double bottom here. Big rally up. We took out this downtrend line today. Of course, we had that spike after the FOMC. Moving average ribbons, you can see they've all been good guides. During this whole downtrend, when they get too wide like that, you can see this, have pointed out all the lows. It's pinching here. We'll see if it can go positive now. Next, chart number 17. Here's the 15-minute chart. Essentially the same wave count look of the S&P. You have kind of a 5-wave move here, which is what you want to see. Next, chart number 18, IWM small caps. I actually meant to update this chart, guys. Let's go and move on to TNA instead. So chart number 19, here's TNA. Now this is the triple leverage ETF for the Russell, but notice you have a really nice coil setup here. So to me, this is a nice objective long setup. Next, chart number 20, IWM on the 2-hour time frame. As you know, we've been stuck in this horizontal range and very choppy ABC type moves here in this. That does it for the major indexes, guys. Again, what I'm looking for possibly is a little pullback tomorrow. Again, if a low is in place, mind you. Maybe a little pullback tomorrow if we get near those downtrend lines on the S&P, triple Qs. That could be a buying opportunity. Again, we had the FOMC today. Sometimes you get the complete opposite the next day. So obviously, we have to be cognizant of that. That doesn't happen. All right, let's move on. Chart number 21, here's the VIX. So one thing I commented earlier was the VIX was not responding to the upside early this week when the market was selling off. You know, it just was not. And part of the reason is a lot of people had already positioned bearish, and there's a lot of put options at 4,000. So we can see the VIX is starting to work lower. The VIX was actually uncorrelated yesterday, and usually you get a reversal in trend when that happens, and that's exactly what we got today. Next, chart number 22. This is the S&P here with a bunch of these indicators we like to follow, such as the VIX and the VVIX. The one thing I want to point on the VVIX, it's come down quite a bit. The next area to watch is if it comes back below the 110 area. It's at 115, so it's not very far away. Another indicator I pointed out, the NYHL here. It went below its lower Bollinger Bands on Monday. Notice that was a buy opportunity, just like it was back there and back here. By the way, guys, if you're watching this on YouTube, we give our chart URLs to all these charts to our members. So if you subscribe to Breakpoint Trades, you can use these charts on your own. So that's a reason to subscribe. Next. Chart number 23, here's the S&P with the Ridex. This is the bearish, the Ridex funds. And I talked about this on the weekend, that the bears started positioning into these Ridex funds late last week and early this week. And you can see now, while this could have spiked higher, and it still could, obviously, if the market reverses down tomorrow, a lot of people started positioning bearish. Think of this as a contrarian indicator. You could see these spikes in the Ridex bear funds occurred at these lows, right? Again, it's like the VIX. You know, the masses are usually wrong, and that's kind of what you see here. So, next. Chart number 24, high yield corporate has been downtrending, leading the market, but had a nice reversal yesterday. And one thing I want to show you guys, you had an objective buy signal yesterday. So, first off, price here was extremely far below its 9-day EMA on Monday. And when you see that, you see a solid candle like this, you can place a buy stop roughly at 50% of that candle, just like I show here, with a tight stop right at the low. I went long HYG yesterday, and I normally don't buy HYG because it doesn't move big percentages, but it ended up being a good trade. You can see with today's move. So this was a very objective setup yesterday with a stop right there. You can see the nice move. And look at your moving average ribbon. See how wide it was here? That ended up being this temporary low, and it's very wide here now. So one thing to follow here, I didn't add it, but add this move to here and watch for a break in symmetry. Next, chart number 25, here's the 10-year treasury yield, moved higher today but off the highs. Next, chart number 26, here's the yield curve. As you know, we continue to monitor this. It fell once again today. It's now at 1.12. Remember, it's the 10-year divided by the 2-year. When it goes below 1, it's inverted, and you almost always get a recession when it happens. Again, you can see how fast it has fallen over the last year. I think it's a given that it's going to go negative this year. And we'll have a recession. Next, let's follow up on a few sectors. Again, I'm not going to go through all the sectors, guys. So just follow up on some of the ones I've been discussing. So XME is one I discussed on Monday. When you had this down candle, I said to watch for a trade opportunity at the 20-day moving average, and that's what you got. Pro tip, guys, whenever you've been uptrending strongly above the 9 EMA and you break the 9 EMA, you almost always get a rally off the 20-day. So what you could do is put a buy limit at the 20-day for a nice trade, and you got it. Okay. Next. Trevor 28, transports. That's an absolute huge move for transports. Look at this candle. A big old move in transports there. Next. Trevor 29, semiconductors. Big move here, closing above the 20-day. Here's like a symmetry target. Would be up around in here. 50, 200-day moving average. Nice divergent low here. Divergence on the RSI. Next. Trevor 30, SOXL, that's one of the semiconductor ETFs, has a wedge look to it, divergence. So if it meets a symmetry target, you take the measurement here, add it to here, would roughly measure up to the 50, 200-day moving average area. Next, Trevor 31, Kathy's ARC fund bounced today too. Kathy's probably happy. Finally getting a bounce. This is a true Christmas tree pattern, all the way up, all the way down, finally into a support zone. Next, Trevor 32, biotech. This is another sector I really like. So this has been downtrending for about a year and a half, almost 2 years, and we have a perfect wedge here, MACD divergence. I'm long this already. You could have a stop right here. This would be your initial target, would be measuring the symmetry height of the wedge, would measure up to about 95, 96 area. LABU is the triple ETF. Next, Trevor 33, XRT retail. I've been showing this one. You can see breaking this trend line today. Next, Trevor 34, XLE Energy. Again, XLE Energy was on fire this year. It's in a bull market. But again, it got too extended up here. It's due for consolidation. We had a symmetry break here. So we've been working our way lower. Can it find support here, or maybe it wants to test the 50-day? Another pro tip, guys. We haven't tested the 50-day for a while. So if it gets down to here, that's probably a good bounce area. Next. Trevor 35, banks. They had a nice rally back today, back into this resistance area. All right, let's move on. Trevor 36, Bitcoin. Nice move today. Otherwise, though, it's still in this overall kind of big coil-like pattern. Keep an eye on this. Next. Trevor 37, Ethereum. This one has more of a triangle wedge type pattern. Energy is building. Next. Trevor 38, ETHG, Ethereum ETF. So you can see this coil pattern. It's a way to play it. Next. Trevor 39, Mara. One of the stocks, crypto type stocks, then this coil type pattern tends to be a big mover. Next, Trevor 40, DBC, commodity ETF. Look at this sell-off here we've had for the last couple weeks. Guys, again, commodities are in a bull market, but they got parabolic here. They had a blow off. Look at this candle. Look at your moving average ribbon, too wide. You also had a symmetry break here. So it's due for this needed consolidation. Now, what I think will happen over time is if it gets down to the 50-day moving average, I think this is your buy opportunity down in there. Next, Trevor 41, DBC on the weekly. We talked about this blow off top over a week ago, and that is playing out. Next, Trevor 42, crude oil. Again, same deal. Big sell-off here. So you guys worried if you got some big gas guzzlers? I think gas will pull back here in the short term. It tends to be a delayed effect at the pump versus the crude oil. You can see how wide the ribbons were here. It was a parabolic move, so it's come in here. 50-day moving average, though, is likely to be a support. Next. Trevor 43, natural gas. It's forming this big coil-type pattern. Keep an eye on it. Next. Trevor 44, UNG, natural gas ETF. You can see a coil forming. Next, chart 45, US dollar, big down day today. You can see there's a coil here. We'll see which way this breaks. Maybe break to the downside. Next, chart 46, gold. Gold is also pulled in here quite a bit. As you know, it had a big run from this coil pattern from February when we were bullish on it. So big pullback. You know, maybe it needs to work down to its 50-day moving average or this area. You can see your ribbons. When the ribbons get too wide, look, that was all these peaks. All right. Next. Chart 47, gold, another gold. This has the GDX-GLD ratio. So keep an eye on that. Again, it got overextended. This is a support area. I'd be looking to buy some back. Next. Chart 48, silver, logically pulling back too. 200-day moving average could be support now. Next. Chart 49, GDX, gold stocks. They're hanging in better here. They bounced off the 20-day moving average. Again, you had a nice, perfect 20-day moving average bounce the other day. That was a good buy opportunity. Moving average is still really wide here, guys. So this, what I'm thinking could happen here is it rallies up, forms a lower high, then comes down again. And that'll be a better buy opportunity to launch a bigger rally. All right, now let's follow up with trade ideas. And remember, I already discussed some above, such as XBI, SOXS, but let's look at some others. So chart 50, Zim. This is one I listed a couple weeks ago as a dividend, or a couple months ago as a dividend play, way back in January. If you bought it, you had a hell of a move. I talked about this being a support area, higher low, good place for a stop. But last Friday, I mentioned it again. They came out with a $17 one-time dividend on March 22nd, payable on April 4th. And it has been running up since. So if you bought it last Friday or even Monday, you've had a great week. It just continues to rock. It's getting quite overbought here. But I looked at a 60-minute. It still could run perhaps a little higher. So what it's doing essentially is running up into that ex-dividend date. Next, chart 51, KWeb, Chinese internet play, huge move up almost 40% today. Chinese stocks are getting absolutely crushed. So if you bought some yesterday, congrats, that was a hell of a buy, but I wasn't long it. That, again, I think that was probably an objective entry. I bought it this morning. If you were following it, there was some news with China going to support their markets, and so that caused the big gap. Again, you had plenty of opportunity to buy it this morning for a momentum trade. Next, chart 52, Baba. You know, nice move there as well. These are the two I played today. Next, following up on other names, chart 53, SSNC. This is one long idea from Monday, and it's worked its way higher. Next, chart 54, Johnson & Johnson, one from Monday that has worked, had a really nice move on Tuesday, tested resistance here, but overall the chart still looks really good. Next, chart 55, Lowe's, one for Monday, followed through here a little bit. Yesterday, today, black candle, still looks okay. Next, chart 56, NLOK. This is a long idea on Monday. It had a big rally yesterday, but guys, I show this because this is why never lose your discipline. When you get a nice trade, take some profits and always set stops. If you didn't set a stop and you came back to your computer at the end of the day, you would not be happy. Stop would have helped you avoid this. Okay, things happen. Use your stops, guys. Don't get lazy. Next, chart 57, Dice. This one still looks okay. This has been on the watch list since Monday. I took a little shot here. You can see the 50-day, 20-day all coming into here. This is your resistance. I'll buy some more if it breaks that. It is a bit thin, though. Next. Chart 58. Apple. Apple bouncing from this area. This chart, I don't have a trend. Thought I had a trend line here. We had a little trend line that was the support. So that was a nice area. And then we followed through today. Now, Apple's going to, run into some of the moving average resistance up here. Next. Chart 59. PayPal, this is a long idea from Monday. Looked like it was due to have some sort of rally. Nice move today, and we'll see over time continues to bounce. Next, chart 60, PayPal in the weekly. Again, perfect Christmas tree. Look at 2020, up from $80 up to $300, double top, all the way down. So, you know, it looked like a trade opportunity. And we're getting it. Next, Trevor 61, Roblox, falling wedge, MACD divergence. So here's a possible symmetry target over time. Next, Trevor 62, Caesars, double bottom. Next, Trevor 63, Square. This has also been downtrending for a long time. We did have a bullish symmetry break back here. So technically it could form a higher low. This could be a long, put a stop right here. And I think we could work higher. Next, Trevor 64, NVIDIA, breaking a wedge here. Closing right at the 50-day moving average now. Next, Trevor 65, NVIDIA, looks like I have it on here twice. So again, guys, as far as trade ideas, like I said, if we have put in a little trade low here, a lot of these beaten up stocks will give trades. You just have to decide what you're going to do. You know, if you just want to play the ETFs, that would probably be easier. XBI, UPRO, TNA, SOXL, or you want to try some of these individual names. That's up to you. Ultimately, if we have formed a trade low in here and we're in a bear market, we think the market could work its way higher for 4 to 6 weeks. Commodities will be in a consolidation, but then we'll look to reestablish short, and then we'll look to buy the commodities back. All right, guys, that does it. Enjoy the rest of your evening and week, and we'll see what happens on Thursday and Friday. Take care.